But Mayuresh Joshi joins us on the show before we end. Mayuresh, it's that sort of a day, right? If you're asking for a dip, your wish is granted, you've got that. If you're looking to buy something, what would it be on this sort of a day? Because plenty of stocks are down with sharp cuts.
Afternoon, Nigel. At Markets with India, obviously, we are looking out for stock sectors where the earnings momentum is expected to continue at a very good pace in the next few quarters. And that probably gets reflected in our EPS ratings and rankings. And with that, I think if there is sufficient amount of institution strength backing it up, that gets reflected in price as well, which probably remains very, very resilient, even in market falls or substantial market falls like we've seen today. Having said that, I think a couple of themes that we are probably looking at within the broader markets. One obviously still remains within the auto ancillary pack, the battery players. So Exide, Amara Raja still seem to be very, very attractive at this juncture. Both these companies have embarked upon an capex in terms of creating sufficient capacities for lithium-ion batteries over the next few years. And a large part of this capex is going to come in from internal accruals. So there is not going to be sufficient amount of leverage that gets built in, even as these capacities come on stream. The second element, obviously, with internal combustion engines still expected to do well in this entire transition phase that we'll probably see over the next few quarters, as a lot more EV products starts getting rolled out from various OEMs. They should be sufficiently equipped, even on that part, over the next few quarters to service both the OEMs as well as the replacement market. Again, both these players have a large part of the industrial business as well, which acts as a very good support in times where auto volumes can probably remain on the sidelines or probably consolidate, which they might at some point of time as we head into the next few quarters. Input costs have largely stabilized, which means margin should be relatively better as well. So I think this story probably looks far more structural in our opinion, and both the EPS RS rankings looks fine. The other stock that we have just recently looked at, and as a clear disclaimer, we have added that in terms of our model portfolio and suggested that to our clients as well, is Poly Medicure. Now the company, interestingly, post his numbers, has given a very interesting commentary, Nigel. They're expecting revenue growth to grow in excess of 22 to 24% at the higher end of the band over the next few quarters. They had started off the year with a 20% growth. So that's a very strong positive as far as the revenue numbers are concerned. On the margin front, they're very, very hopeful of maintaining that margin band between 26 and 27%. The industries that they cater to, specifically the hospital equipment space, and the kind of products that can come through, looking at their commentary, specifically the US market, they're expecting 8 to 10 products over the next few quarters, which can be high margin products, which will be extremely value accretive to the bottom line as we speak, as these get monetized and obviously distributed and circulated within the US markets, should contribute significantly well. The Italian subsidiary is doing reasonably well. And again, a large part of the expectations in terms of input costs being stabilized in the domestic business, specifically the renal business, expected to come back to strong growth, would mean overall numbers would probably look positive. So I think a few of these diagnostic players, hospital ancillaries, and auto ancillaries, they probably look attractive at this stage.
Vodafone Idea, anyone's guess what's happening next. What are your bets in telecom like? Would you buy anything afresh? Would you buy, for instance, Bharti now?
Afternoon, Surabhi. We'll wait for a pullback. And obviously, I think if you look at the positioning between all the three names, Jio through Reliance, Bharti Airtel, obviously on its standalone and console numbers, and Vodafone Idea as well. Obviously, the market share gains, both in terms of subscriber market share and revenue market share that Bharti and Reliance Jio are gaining at the behest of Vodafone Idea, has been very, very prominent over the last few quarters. The kind of capex that Bharti Airtel has done, specifically in terms of its 5G outlay, infrastructure, optical fibers, have been very, very aggressive over the last few quarters. And as they fructify in the next few months and quarters as well, I think a substantial portion of the 5G revenue will start accruing. The trigger, Surabhi, for both these stocks, whether it's Bharti or Jio or even Vodafone Idea, is at what point of time will the ARPU increase come through? Because the street is sensing that it is high time that ARPU increases come through both for the 4G and the 5G ecosystem, as well as for the enterprise plans. And if that happens over the next few weeks or months, it creates a sufficient cushion in terms of significant cash flow improvement, deleveraging the balance sheet, and therefore creating a better return profile as well. So definitely wait out for pullbacks on Bharti Airtel. Jio through Reliance obviously looks very, very attractive as well. So yeah, I think both these stories on pullbacks can look decent.
Yeah, all right. Well, the stock of the last few minutes is going to be Shriram Finance. In the next few minutes, we'll know whether or not, in the next couple of hours, we'll know whether it comes in the Nifty or not. But that aside, Mayuresh, what's your view? If there is a disappointment and it doesn't come into the Nifty, valuation support it has, but maybe some on the street were playing for this event. Would you be a buyer or are there better opportunities?
So Nigel, yes, I think there is always a different but if that does correct because of this reason, and if it does pull back, I think it would present itself to be a good opportunity for investors who are long-term looking at a structural story. As a clear disclaimer, we do own this stock in our portfolios. And our take is very clear. The kind of franchise that Shriram Finance has, the expectations in terms of very solid advances growth, even in lieu of the RBI circular for the unsecured stroke personal loan advances, Shriram has a very minuscule portion of that, hardly 2.5 or 3%, which de-risks itself in terms of any additional provisioning that might be required even on this book or any potential defaults thereof as well. So I think it's a solid franchise in our opinion. If it doesn't get added in, maybe that disappointment might come through, but it might last only for a few days. We continue to be holding this stock and continue to remain optimistic about this.
It might last only for a few days. The other contenders would perhaps be the likes of Zomato, etc. If that were to happen, then what will be very interesting would be the PE of the Nifty itself, because the last few additions on the Nifty, a lot of them have been from the FMCG pack itself, most of them trading upwards of 40, 50 PE, and that structurally has taken the Nifty's own valuations higher as well. But finally, before we let you go, Mayuresh, your thoughts on the hotel space? We were talking about Juniper Hotels, and everyone's pretty gung-ho about the tailwinds in the sector right now. Would you look at Juniper or still stick with the leader?
Juniper is a new listing, so I think let's see how the numbers play out. And obviously, as you pointed out, with the debt deleveraging happening on the balance sheet, a substantial portion of that finance cost is going to come off the balance sheet in the next few quarters, implying that the earnings should see a strong bump up with lesser interest costs that are happening there. Obviously, I think the entire sector probably looks very well placed over the last few quarters. And even as we speak, weekends probably are still full, occupancy rates still expected to be significantly higher. We'll obviously jump into the hottest holiday season as we enter into Q4, the end of Q4 and the beginning of Q1 as well. But a lot of these stocks, Mangalam, have moved up quite significantly. They trade in far higher levels above pivot as we see it at Markets with India. But I think stocks like Indian Hotels, stocks like EIH, stocks like Lemon Tree, if anybody is holding, they can clearly ride to the momentum, but have your risk practices in place. Any 1 or 2 quarters where I think the numbers don't match expectations, the sell-off can be equally brutal as well.
Yeah, absolutely. But I don't think we have an off season in terms of tourism in India anymore. Barring exam season, everything else is tourism season, I think.
It's not optional.
It is. But the thing
not
is that,
seasonal.
The
Mandatory.
thing is that exam season is off season for people who have kids who have exams, etc. That's actually great season for people who don't want kids around there.
So basically, 365 days a year, it's travel season in India, the way we see it. But Mayuresh, thank you very much for joining in. Good having your insights on all that we've discussed today.